Bitcoin has experienced a volatile week, starting its downward trend on the 19th and reaching as low as $400 on the 23rd, marking the lowest price in 10 days. Despite a brief rebound to 113,290, cautious remarks from U.S. Federal Reserve Chairman Jerome Powell triggered further declines, with Powell emphasizing the risk of aggressive rate cuts and the need to balance inflation with employment stability. The continued drop has resulted in the kimchi premium reaching its highest level since June, reflecting the growing price difference between domestic and overseas Bitcoin markets, and causing over $167 million in long positions and $87 million in short positions to be liquidated within 24 hours. Meanwhile, a major development between the UK and US is set to reshape the crypto investment landscape. Both countries have formed a joint task force with a 180-day deadline to harmonize crypto product listings, custody, and disclosure standards, aiming to simplify cross-border trading, enhance liquidity, and reduce operational risks for institutions. London's new professional-only crypto ETPs and upcoming streamlined listings could emulate US market efficiency, while harmonized custody models, backed by robust regulatory oversight, will set new benchmarks for security and transparency. A stack of practical documents, ranging from recognition notes to disclosure annexes, is in the works, expected to trim listing times and encourage cross-listings, with primary beneficiaries including banks, custodians, issuers, and exchanges. On the corporate front, Juicy Holdings announced a bold move, authorizing up to $1 billion of its cash reserves for investment in Bitcoin and other cryptocurrencies under a carefully structured risk framework, and using top-tier third-party custodians for security. The new investment policy is backed by a dedicated crypto asset risk committee and regular SEC disclosures, positioning Juicy Holdings among a growing number of global companies viewing crypto as both a hedge and a long-term value play, especially given recent macroeconomic uncertainties. As news of Juicy's policy and its appointment of Dr. Doug Bjerger as COO broke, the company's stock surged over 40% in pre-market trading, underlining market enthusiasm for crypto-driven corporate innovation. Simultaneously, Bitcoin has rebounded above $112,000 after a sharp dip, stabilizing at $112,885 with a $2.24 trillion market cap and $48.25 billion in trading volume, signaling resilience amid heightened volatility. Analysts at Deutsche Bank now suggest Bitcoin could join gold on central bank balance sheets within 5 years, validating its emerging role in global finance while cautioning that gold will remain the primary reserve asset through 2030. The report points to Bitcoin's record low volatility in August, despite its price surging above $120,000, indicating a shift from pure speculation toward legitimacy and institutional adoption. Forecasts remain bullish, with expectations of Bitcoin reaching $120,000 by year-end and possibly surpassing $150,000 in Q4 2025, as market maturity and regulatory clarity expand. Infrastructure advancements like the Bitcoin Hyper Layer 2 platform, which raised $18 million in a recent pre-sale, promise to address scalability challenges and further strengthen the network's technological underpinnings. Short-term pricing remains influenced by profit-taking, Fed policy, and technical factors like the Relative Strength Index, highlighting the market's dynamic but unpredictable nature. As the industry faces ongoing volatility, optimism is growing around technological growth and institutional involvement, both pointing to a transformative future for Bitcoin and the broader crypto ecosystem. So, what do you think about the shifting tides in crypto regulation, major corporate investments, and the road ahead for Bitcoin? Let us know your thoughts in the comments below, subscribe for more updates, and hit the bell icon to never miss a crypto news roundup.